and welcome to the week ahead for the week commencing the 11th of April. I'm Brenda Kelly. It's a very heavy macro week ahead of us, and what's interesting is that we have a lot of China data ahead of us. You have to look at what happened in September, where the Federal Reserve actually laid off from hiking any interest rates because of China worries. So now we'll actually keep an eye on that. We have CPI data coming out on Monday along with PPI, but Friday is the big one where we're expecting to see GDP data released, and it's expected to remain below that 7% marker and could very well put a little bit of pressure and volatility back in the stock market again if it fails to meet expectations. Ahead of that, however, we are going to look a little bit closer to home. We've got the UK CPI data, and we also have the similar for that of the Eurozone too. When it comes to the big trade of the week, certainly the week gone by has been the dollar-yen pair, and more to a point, I think the sterling-yen pair has been even more interesting to watch. We've seen a bit of a spike in volatility amongst equity indices and something of a flight to safety, which has manifested itself in quite a strong Japanese yen. So my trade to watch next week will be in relation to that, and any sort of weaker US macro data could very well be to the detriment of the dollar-yen pair. So while below 109.15, I am thinking that we could actually make a boost back down towards that 106.90, possibly 106.50 level. And this is born out of the fact that there's a long-term head and shoulders pattern on the technical analysis chart, which would ultimately complete from those particular highs. And of course, you've got a lot of information coming from the Bank of Japan in respect of whether or not they're going to give us any sort of intervention in these FX markets. Note though, they have mentioned that the 100 mark is something of an interesting one and that they're quite happy with current FX levels. So that does give you something of a pointer where the actual range could be. The UK will obviously get a look at what the Bank of England thinks in terms of monetary policy, and certainly nobody's expecting to see anything change there, with all voting members expected to remain pat and keeping rates as is. And certainly ahead of the Brexit referendum in June, we're not expecting to see anything all that interesting from the Bank of England. What will be noteworthy is any sort of doubts about the economy going forward, and certainly the manufacturing sector in the UK and industrial production have looked a lot softer, and the services sector is the one thing that is keeping the economy on the up and up. The trade deficit, however, is a different story altogether, and I would imagine that the 140 level against the US dollar may very well come under pressure over the coming days. My trade, however, is not the cable, it is more the euro sterling, and it has been for a while. Certainly the push through that 80 pence mark does leave the door open for additional gains. Now the RSI is looking ever so slightly stretched, but there is a propensity for us to move up to the top band of the channel, the descending channel that's been in place for quite a number of years, which would put us on a mark of around 81.70. So for the time being, I'm looking to perhaps look at the dips in the euro sterling, which could actually provide a good upside target in the very near term. And owing to popular demand, LCG will be running a seminar here in our offices on Thursday the 14th of April, and the topic is Brexit, the referendum. We'll be looking for trading opportunities in the run-up to the referendum and of course the aftermath, whatever the outcome may be. So do feel free to sign up for that. The details are on our website. In the meantime, happy trading, use stop losses, and I'll see you next week.